Guys, welcome to the Daily Market Wrap for the 14th of July. Jack, some big news overnight and the weekend as well around the Strait of Hormuz. Trump has demanded a 20% levy for countries wanting to transition through that waterway in return for the defence of the strait.
Yeah, things have really escalated. It seems like Trump's been distracted recently with NATO and global diplomacy, and now all that's wrapped up, he's sort of switched tact back to the Strait of Hormuz and the conflict over there. So basically he's come out and said he's reinstalling the US naval blockade against the Iranian ships, and then he's also just charging a general 20% levy on any transit through the waterway. What that sort of means is any large cargo ship that's fully stocked with oil is going to have to pay around $32 million to be able to move through that waterway. When the Iranians were charging a toll, it was only about $2 million. So this is a huge sort of increase in escalation in the tensions around the strait. What it actually looks like in reality is unsure. He's sort of just come out with the declaration like he normally does. So how it actually plays out, there's got to be a lot of moving parts.
Yeah, it's interesting because there's sort of two parts. He's, basically said that the strait will be open and free to move through, yet the price of oil has jumped 10%. So it just shows how significant that tariff or that levy actually is compared to previous
100%
compared to previous times. South Korea, we don't talk about South Korea too often, but a big tech sell-off on Monday. Tell us about that.
Yeah, so South Korea, one of its largest companies, SK Hynix. Yeah, SK Hynix. They actually had an offering on the US market, so investors were able to get exposure to the South Korean company through the US market, and it was the second or third largest offering in history, just behind SpaceX. South Korea is heavily involved in the semiconductor and tech industries. That sort of is what drives their markets. Since SK Hynix was available to US investors, obviously they had a huge increase in share price, but over the last day or so, that's really come off a lot. That flowed through the South Korean stock market, and now it's sort of moved into the US market as a whole due to the concerns, again, around AI spending. Is it outpacing the actual returns that the companies can expect? And so it's been that real tussle between optimism around AI, what it can do and unlock for companies, versus what it actually means on a dollar turn basis. Our company's got to get returns, revenue out of this AI investment, and how much it's all going to cost in the long run. So yeah, that's spilled into the US markets now, and obviously this oil development hasn't helped that at all.
And a few announcements coming out today. So we've got the latest inflation figures coming out from the US. So inflation tipped to drop fairly substantially from 4.2 down to 3.8%.
Yeah, so that's the headline inflation figure, which is tipped to come off a fair bit for this last month. Obviously the US inflation figure is the most important in the world, and it's got to be the number one data point that the Fed looks at when they're looking at their interest rates. Now, headline inflation, that accounts for everything, all the prices in the economy. So it's also going to include agriculture, food prices, and the petrol prices at the pump. Obviously, these are so in flux. The petrol price dropped heaps last month in the US, as it did in Australia. So that's why headlines coming off. The important figure, though, is the core inflation, which takes the food and petrol prices out of it. That's actually holding steady, which means inflation isn't easing at all. It's still a lot of pressure, and that's at 2.9%. The Fed prefers inflation to be at 2%. So we can see that there's still a large gap between the real figure and the goal figure, and that's going to have a big impact on the Fed's rate decisions.
And tomorrow we've got Chinese GDP year-on-year growth.
Yeah, so Chinese GDP, this is really important for the Aussie dollar because Australia is so exposed to the Chinese economy due to our exports and our trade relationship. China buys a lot of our raw materials that we produce through mining. So the Australian dollar is really closely linked with the Chinese economy. The GDP is forecast to cool for this previous quarter year on year from 5% to 4.5%. So their economy is still growing, it's just growing at a slower rate. And so any downside shock, so if it comes in lower than 4.5%, we would expect to see the Aussie dollar weaken as well. Aussie dollar already under pressure from the rising geopolitical tensions as well.
And what time is that on tomorrow?
It'll be in the morning Australia time.
Okay. Yeah, one to look out for. So some of the other big moves, obviously the oil, which we've spoken about, one of the biggest moves we've seen probably in a few months, to be honest.
Yeah, since early April for the Brent Crude, just as it was getting down to the pre-war levels, which I said it wouldn't do for a long time, it shot back up. So yeah, saved my credibility a bit.
And gold, we do tend to see a bit of an opposite effect here. When we get that sort of news coming out. But can you tell us a bit about why this has been impacted so much? 3% is a pretty reasonable move for gold, considering the size of the product.
Yeah, this is largely due to the US dollar strength. So with the rising tensions, the US dollar is a safe haven. People will rotate into that away from risky assets like equities and move into the safe US dollar. The US dollar is gaining strength because inflation is sticky. High oil prices only add to inflation pressures. That means the Fed will raise rates, which means the interest rate gained on the US dollar moves up. So people investing in US dollars are going to get greater returns than if they held an asset like gold, which doesn't actually produce any yields, any sort of interest rates, interest payments, anything like that. The only value in gold is the actual price of gold. So you don't actually get any returns just for holding gold versus if you just hold the US dollar or assets of the like bond yields.
And the Aussie Canadian, so presumably this has come down off the Canadian dollar increasing on the back of the oil rise. Yeah,
the twofold. Obviously, the Aussie struggles in raised geopolitical tensions. It's a risk currency, so when markets are willing to take on risk, that's good for the Aussie dollar. When they're not willing to take on risk, like it'll happen later this week, the Aussie struggles. Conversely, Canada is the third largest oil producer in the world. So when oil's doing well, the Canadian dollar will do well. So those two forces are pushing the Aussie CAD lower.
Okay. And the US dollar index, so we've seen this going from strength to strength over the past, sort of 3 to 6 months plus. Are there any downsides to the US economy when they get the strength of the dollar increasing so consistently over that sort of period of time?
Yeah, it can be a struggle for equities. Obviously, it increases borrowing costs, which is what we're seeing with the AI investment. A lot of that is debt funded, so these big tech companies are going to the banks to get these big loans to invest in AI and fund that. Obviously, when the dollar rises, that's a lot more expensive to do. They'll do it less, they'll get smaller loans. So that's going to limit company growth and the bottom line for companies. So that's the impact a strong dollar can have.
And one we don't talk about too often, which is copper. Tell us about the movements here on copper and what are the sort of key market drivers of copper itself?
Yeah, I thought we'd change things up a bit, get away from oil and gold and the USD and look at copper, which is obviously a different commodity. From a technical point of view, at the start of the year, the price was pretty stable, sort of hovering between that $5.75 and $6 mark. It dropped off when the conflict kicked off, and then sort of went on a big trend, big uptrend for the next 2 months. We can see it hit a double top around that $6.60 mark, sort of mid-June, mid-May, late June. The double top indicates that there was a big bullish trend The buyers got exhausted. The price came off a bit, got some support, tried to retest that high point and couldn't break through. So what this means, it's a bit of a bearish reversal from that previous uptrend. And then we can say over the last couple of weeks, there's been that consolidation, the 100-day moving average, which is just the average price of copper over the previous 100 days, is acting as a key support level, whereas the 50-day is acting as a resistance level, and it's kind of trading between those two channels. So any breakout either side will sort of dictate the short-term movement. From a fundamental level, copper is inverse to the US dollar. So when one goes up, the other goes down. When the US dollar is strengthening, as it is at the moment, it means copper is more expensive because people use the US dollar to buy copper. That's what it's priced in. Price of copper goes up, that means demand drops down as it's more expensive to use it. In the bigger picture, there's been underinvestment in copper mines and falling ore grades over the past few years, which is impacting it. But what's supporting it is it's used in AI data centers. I think each data center needs about 40,000 tons of copper. So there's huge demand there. Any grid modernisation and electrification, so electric vehicles as well, all need copper. So that's what's going to provide that long-term support. And so in the short term, over the next couple of years, I think the copper price won't do much, but I think there's that long-term support that's going to act as that key demand area as we modernise everything. Copper's got to be needed. So it's interesting to see what will happen in the short term though.
Okay. Interesting. Yeah, you really got a more commercial use as opposed to some of the other commodities we typically talk about. And the article of the day, what's this one about, Jack?
Yeah, in the US, we've got Q2 earnings reports coming out this week. So the big investment banks are going to kick that off. The last quarter has been really positive from a trading perspective for them. So this will just dive into a bit of that and what investors will be looking at.
Awesome. Thanks, guys.
Thank you.